Good afternoon, everybody. My name's Tom Fritz. I'm here for the International Futures Group as well as EFG Group. We're going to update the grain markets today, but on a little bit of a switch, we're going to start with the wheat market today. If any of you had watched the Weather Channel over the weekend, all you heard about was the massive flooding in Texas and Oklahoma. Most people would have thought the wheat market would have been higher on that news today, but not so. Wheat market got trashed today. So what happened? It was all about the US dollar being sharply higher. The US dollar in turn makes US wheat that much more expensive on the world markets. Adding to that, the European Union is upgrading their soft wheat crop, so they have a better crop. They have a cheaper price to it because of the US dollar, so down goes US wheat. So we look at the crop ratings this afternoon. So a lot of folks are thinking, given the flooding, that we should see lower ratings for the hard winter wheat crops. Well, in the case of that, Oklahoma down 3 percentage points, and it's good to excellent. It's kind of an eye-opener, what's going on there. Texas wheat, unchanged. So how do we explain that? My idea is that nobody knows for sure what the impact of this flooding is. Is it reducing quality or is it reducing quantity? Well, market action today suggested we're reducing quality. What does that mean? Instead of high protein wheat, we're going to have feed wheat. And if we have more feed wheat, that means it has to compete with the price of corn. And if you look at the spreads between wheat versus corn, at roughly $1.35 to $1.40 wheat premium, that makes wheat too expensive to compete in the feed wheat markets, or I should say in the feed grain markets, period. So what do we have to look forward to? As time goes by, these fields in Oklahoma, Texas, and Kansas are expected to dry out in the near term, so maybe we can get a little bit better of a handle as to what's happening out there. But right now, the biggest concern is quality, not quantity, so down we go. Looking at the corn market, what's the forecast? Wet and warm. That's just what the corn market wants right now, or I should say in this case, the corn crop. Right now, the corn crop is 92% planted. That's 4 percentage points above the norm. We've got a wet forecast this week, so come next week, your planting on corn will probably be right about at the national average. But given the forecasts of wet and warm, it's just what a corn crop wants to get started. Corn crop is currently rated, this is the first rating of the season, your corn crop is rated 74% good to excellent. So an excellent start to the corn market. Soybeans, grinding lower. I think some intermarket spreading held beans up today. Last week we saw a fair amount of buying feed grains, selling oil seeds. So a little bit of a reversal in that regard, but the bean market is still grinding lower just based on an oversupply. So what do we have to look forward to? You look at the bean crop at 61% planted, about 4 percentage points above the norm. You look at this forecast, so come next week, we're going to be at about normal. But given the current weather forecast, we're going to get a great start to the soybean crop. So I have to think, in the case of corn and beans, we're going to continue to grind lower. We're in line to challenge our October lows. What happens after we take out those October lows, which I think we will? Stay tuned. I'm going to give you a little bit of a teaser in that regard because I do think the market is going to make a low, but I want you to stay tuned to find out when that low will be made.